Hi, this is Gene Trowbridge, and you found us. You found our video, Return On. Welcome to our YouTube channel. Before you leave, make sure you subscribe. I'm going to talk to you about Return On because it's a very important concept in the world of investment, your own investment or syndication. Sponsors need to know this, and investors need to know this. So I'm the founding partner of our law firm. I was a syndicator for 20 years building self-storage facilities. Been a real estate broker forever. 40 years senior instructor at the CCIM Institute. But at 45, I decided I wanted to be a lawyer, and I went to law school. 45. I've written a book. It's a whole new business. I'm in the 4th edition of my book, and I'll show you how you can get a copy of it at the end of this presentation. And I am an old runner, typically run 2 or 3 half marathons a year. Time is catching up to me. My times are getting slower and slower, but I can still do it. And that's what I do to keep it active. So understanding the term return on, let's relate it to a bank account. Money in the bank. Let's say you put $100,000 in the bank. The bank is going to pay you 10% interest. So at the end of the year, you have $110,000 in the bank. You go to the bank and you withdraw $10,000. Your ending balance is $100,000. All of your capital is still in the bank, and what you've withdrawn is the return on your capital. And it's 10% return on, and the distribution is 10%. Okay, that makes sense. Now let's look at this example. You put $100,000 in the bank, they pay you $10,000. You go down to the bank, there's $110,000 in the bank, and you withdraw $12,000. Your ending balance is $98,000. Okay, so it makes some sense that you've taken some of your $100,000 out, right? So when you took the $10,000, there's your return on investment of 10%. The extra $2,000 is a return of your investment. 2 different things. The distribution is 12%, yes, but your return on is 10 and your return of is 2. Now this plays a role in real estate syndication. Let's look at this. We raise $1 million for a project. We're projecting a 10% cash on cash return at the end of the year. That's what the project is supposed to make. The project creates income of $200,000. It has $45,000 of expenses, $55,000 of debt service, for a cash flow of $100,000. We could actually distribute that $100,000. And based on our original investment of $1 million, we've distributed a 10% return on the money because it's all come from operations. We still have $1 million invested. Here's where the problem is. We do a $1 million fund, anticipating a $10,000 return, $200,000 revenue, $55,000 in expenses, $55,000 in debt service, cash flow of $90,000. Okay. But we send $100,000 to the investors. I guess my question is, where does the extra $10,000 come from? Well, it must come from capital, because there's a return. This investment earned $90,000 on $1 million. That's a 9% return on. But at the same time, when we made a distribution of 100, we must have pulled $10,000 from this. Maybe it was in reserves. I don't know why it was sitting there, but anyhow, we pulled $10,000 of our investors' money to make the full distribution. Now, this is kind of interesting. I have another video that talks about, is this fraud? And the question is this fraud? is sending $100,000 to your investors and calling it a 10% return on investment fraudulent? Well, at least it's misrepresentation. It may very well be fraudulent, and you may very well be subject to a civil lawsuit or a criminal lawsuit. But the thing that's interesting is at the end of the year or the quarter, you're going to send a report to the investors. And this is what the report would say if you're truthful. The report would say we raised $1 million, we had income of 200, expenses of 55, debt service of 55, we had a cash flow of 90, and enclosed you will find your check for $100,000 representing a 10% return. If you see that the cash flow, which is available for distribution from operations, doesn't equal what the distribution is, you need to call the sponsor. You need to research what's going on in your syndication. So there's all sorts of things to learn about being a syndicator. And my book, which you can get a free PDF for by going to book.tnllp.com. We'll give you a free PDF. We'll also give you a chance, just for the cost of shipping, to get a copy of the book. And additionally, it's not there, but you could go to Amazon and find the Audible of our book. So the things in our book that we talk about is fiduciary duties. You have the members' money. You better manage it properly. That will be a discussion of misrepresentation and fraudulent activities in that chapter. Risk and reward. I'll tell you about the risks that you take as a syndicator and how you reward yourself, what makes sense. We'll talk about entity structures, talk about tenants in common, LLCs, limited partnerships. We'll talk about the securities laws, lending requirements. How do you raise money from a bank if you have a group of investors? What are the IRS rules as it relates to being a group investment? An example of accounting procedures throughout the life of a fund, where we talk about capital accounts for the investor and for the fund, and investor relations. So all those things are covered in my book, and I'd be happy if you took advantage of getting a copy. And then as you read it, give me a call. We'll talk about things. That's fine. You can always contact us by calling our common line, by going to our website and asking for a 30-minute consultation with one of the 3 attorneys we have, and listen to more of our YouTube presentations. So before you leave, make sure that you subscribe to our YouTube channel, and I guess we'll see you the next time. Thanks.